What's up, guys? Wanted to do this really short video for you and go over why I feel like now is the best opportunity of my real estate investing career to get involved in real estate. And I wanted to kind of share that with you. So, as you guys know, founder, CEO of Bell Capital, and we are constantly raising capital, going over, keeping our relationships with you guys about investing with us, whether now or in the future. But here's what's happening right now. So, the number one reason why I think now is the perfect time is we've been talking about it a lot. There's a $2 trillion debt maturity that's coming in the commercial real estate sector between now and the next 3 years. That is happening, folks. So, some of the best multifamily commercial real estate on the planet has debt that's associated with it, which is that's our investment strategy, is to go after these sellers that are we call them distressed sellers. So they're distressed sellers, not distressed assets. These are some of the best locations, the best properties, best in class real estate that may be bought in 2020, 21, that their debt is now maturing and they have to sell this property or they got to recap it. Recap meaning recapitalize. What's going to happen is they're going to go back to the debt market. The rates are not where they need to be. They're going to have to sell and they're going to have to sell at a discount. That's just kind of the game, right? When you know this game, I'm not talking about your mommy and daddy's single family house or your residential property or an eightplex. I'm talking about big institutional quality, great assets, great locations that are tied to the debt market. That is happening. Right now, that's all anybody's ever talking about. That's why this is so important. So, $2 trillion coming due over the next 3 years. Got to take advantage of that. That's number one. Number two, Wash is coming into the market. So, there's going to be a new Fed chair taking over. And anytime there's a new king, he instills a new law. And usually, what happens is they look at what's happened in the past, what is going to actually spike the market. Right now, spiking the market can only be one or two things: raise the interest rates or lower them. If he raises the interest rates, people are going to go nuts. If he lowers the interest rates, people are going to go nuts. So, odds are, with the way everything's happening with the war, oil prices, Bitcoin being down, Bitcoin going back up, AI, everyone's talking about this AI bubble. The private credit market is going nuts right now. So far as people are concerned about it, Blackstone's not. They're one of the largest investors in private credit, so they're not worried about this stuff. But you should be, because you have to ask yourself, where's the money going to go? And if the interest rates come down and people flood the market that's been sitting on the sidelines, what's going to happen to values of real assets? They're going to go up, right? That's just kind of what it is. And guaranteed, as soon as those rates go down, I tell people this all the time. I know I'm talking fast because I get excited about this kind of stuff. Lowering the interest rates and letting people have access to more debt is another inflationary activity. That is another way to print money because people can borrow more money at less cost, right? Cost capital. So as that happens, you will get the opportunity to jump on board in this next regime change because it is changing no matter what. It's coming up, I think, this week, but it is happening. I think they voted today, and it is moving majorly in his way. It's going to happen anyways. He's a President Trump guy. Trump wants him in. He's a billionaire investor as well. So he understands as it relates to capital, how it works, why it's necessary. You can't have somebody in these seats that doesn't understand the flow of capital in and out and being able to make this market move. Even like right here, they're talking about the 10-year treasury being 4.4. So that's number two. Number three is the tax benefits. The big, beautiful bill, right? From Donald Trump brought back 100% depreciation on assets. So let's say you bought a property for $100 million. 9 times out of 10, if it's a properties we look at, you would probably be able to write 100%, or I usually say roughly about 33% of whatever it is that you pay for that property off. And if you put down 40%, 35%, then you are depreciating all of the money that all of the property 100%, but you're probably not going to be paying taxes on your cash flow on that property, on the cash flow that you get from the property for probably 3, 4 years, right? That is beautiful. Reason why is because the tax benefits are the only reason why you would invest in a real asset like real estate, anyways. People get into real estate because they make a lot of money in their business. They need the tax write-offs, and it's almost like the tax code is written for real estate. Now it was going away. Donald Trump, love him or hate him, brought that bill back. So it doesn't just help real estate; it helps other people that have that need to do R&D, like dentists, people who own jets and private jets and things like that, corporations. It helps a lot of people. That is still in there. So the fact that that has come back between the Fed chair, the trillions of dollars worth of debt maturing, and the tax benefits that have been now put back into play while Donald Trump is here, that's huge, right? That is the reason why you get involved right now. So the other thing I already talked about the lowering of rates because the Fed chair, the change of power, right? But as these rates come down, the cost of capital is going to be a lot less. Deals are going to start moving. All this capital that you see sitting off to the sidelines, a lot of these institutions that can't play, but they are sitting on a war chest of money, they're going to start dumping that money back. Capital has to get placed and go someplace because money needs a return and return needs money. So that the interest rate will be lower. That money is going to start to move the market. So now will be the time between now, I would say probably within the next 24 months, between 26, 27, and probably the end of 27. This will be the opportunity to take advantage of great real estate. And if your money is sitting in the bank earning nothing, you're getting beat on it. You need to get your money out of the banks and enroll it into a real asset because now will be the time to do that over this next 12 to 18 months. All right, next, there's a glut of inventory, right? Like everyone says there's no inventory. That is not true. Because if you're looking at the assets we're looking at, you have um best in class assets, best locations coming to market and then not selling. So they're still on the owner's balance sheet. And when I say owners, I'm not talking about some doctor or dentist. I'm talking about an institution or a company that's a syndicator or a fund manager that they're not looking at properties anymore. They're looking at a spreadsheet, like with thousands of apartment units on like line item by line item. And they're saying, hey, look, from line item 100 down to 200, 100 line items. They're all assets, 100 units, 200 units, 300 units at a time. Get rid of all of these because the debt is maturing. Get rid of them. Now, if they don't sell, they're still on their balance sheet and they're still costing them money. And maybe they extended and pretended. Maybe they bought that rate down for another year. As you guys saw, Barry Sternlicht just actually gated redemptions on his investors from pulling out of their fund that they have right now, not because of the assets are bad, but because of the debt market is unfriendly. Cash flow, they can't cash flow those deals. They can't have people pulling out their money. That is happening, folks. So therefore, there is a shit ton of properties just sitting, waiting to go into the market. And what happens when there's a supply and demand issue and there's not enough capital or debt ready to take them? You can steal stuff. That's my goal for Bell Capital, 1000%. So that glut of inventory is happening. There's a lot of debt. I mean, there's a lot of assets waiting for capital. There's a lot of assets that have to sell. And trust me, once these deals trade, they gotta go. They're not gonna keep coming to market and pulling them. So that's another thing. Next, I just kind of talked about that with the glut of inventory, but there's a lot of other institutions that are sidelined that cannot buy. Think about it like this. If I have this glut of inventory on a spreadsheet of assets that I can't move, and then I've raised all this capital, and I'm not gonna go buy more assets. I'm gonna have to wait. So I'm gonna say, okay, fine, let's just continue to raise capital. Let's maintain what we have. Let's make sure that when the floodgates open, we can exit these assets, recapitalize, meaning pay my investors back or pay the investors back, and then we will go ahead and deploy capital. But until then, buying stops, pencils down. This is what it's called in the industry. Pencils down, no more, maintain what we have. Don't lose. It turns into a conservation game. That is what's happening right now with a lot of institutional players that cannot play the game, right? So this is important. Like I said, debt's maturing, new Fed's coming. The tax benefits that just got reinstated, well, not just got reinstated, but they got reinstated this year. You have the lowering of interest rates that's going to happen. Trust me. New regime, they're going to come up with a plan. It's either going to raise rates. Nobody's going to want that right now, especially with the war, oil prices. They might, because I think the CPI came in where it needed to be and the jobs came in where it needed to be, but they're a little concerned because inflation was closer to 3% than the 2.6 than they really wanted, right? Especially that gold is down, silver and all the other stuff isn't performing the way that they wanted to. There's a concern right now. There's some chaos. So that may be a reason to they can raise rates. They talked about it, but they won't. I'm telling you, at some point they're going to either keep rates where they are or they're going to lower them. Next, that glut of inventory. Somebody's going to have to buy these assets. They got to change hands. These are not single family houses. That's why I said if you're going to make an investment, don't invest in a single family house. One unit doesn't is not a good investment. You need multiple units for an investment. You need multiple people paying at one time. So that glut of inventory is going to have to exit their hands and go to somebody else. They don't just disappear. They have to trade hands over time. So when you hear people say this is going to be the biggest transfer of wealth on the planet, they're talking about it's transferring to another person. It doesn't dissipate and go away. It's not going to their grandkids. It's going from in the property to another institution, to another institution, to another institution. That's how this works. Last but not least, the sideline institutions are going to have to come to the market at some point. But for now, they're sidelined. They're probably not going to do anything, no major moves for at least another 6 months to maybe 8 months. Then they're going to roll in at the end of the next 12 months. And then over the next 12 months after that, 2 years in, the second year, everybody's going to be on the game field playing, and you got to have some assets during there. That's why we're pushing really hard. We held off for the last couple of years because we knew that it wasn't the right time. And thank God we did, because I watch a lot of developers and stuff like that right now that are getting crushed. Nobody thought it was going to take 3 years for the rates to go down. And if you're in this side of the game, I'm not talking about you buying a single family house, flipping it. You house flippers, yeah, you might have done great. Some house flippers did not. But what I'm talking about is playing a big boy game or big girl game and actually raising capital, closing a deal where all of your money is tied to the index of the 10-year or 3-year treasury. You wouldn't have been able to get out. There was no buyers. There was no capital. You would have been bankrupt, or your property went back to the banks or been in receivership by now, because Fannie and Freddie don't play. So anyways, next, the other thing I wanted to go over really fast is the other asset. Here's why this is important, because there's only a couple of asset classes that you're going to want to play. So if you're going to do this, I did some research, you can look it up too. The reason why I said real estate is going to be the best play for you is because there's a couple of places you can put your money. You just got to know where you want it. So number one, if you're going to there's $11 trillion in savings right now. Just bank savings. That's where that money is sitting. There's $8 trillion in money markets. And the bond market itself is roughly about $300 trillion. That's combined, fixed, all the other different bonds that are associated with the corporate bonds. But that's a $300 trillion market. Next, you have the stock market, or the actual stock market is a global thing, for it's $120 trillion. But real estate, we'll leave crypto. Everyone is jumping all the board about crypto, and I'm using crypto as a combination. That's only a $30 trillion market. It's not that huge yet. So I'm going over the places you can have your money, because you got to know where you want your money. If you're not going to play the real estate game and I'm talking to you about the opportunities, you got to take a look at what are your other options as an asset class, because there's only a couple places to do. These are all liquid markets. Your savings is liquid. The bond market's liquid. Stocks are liquid. Crypto's liquid. And retirement accounts have about $40 trillion sitting in them. There's about, I want to say there's 11 trillion, might be $11 trillion in trapped equity in single family houses. I can't remember if it was 11 or it might be 40. I got to look again. It's not on my sheet. Reason why I bring that up is this, because there's the real estate as an asset class. There's a $300 trillion market. There is no reason why you shouldn't have your liquid money out of this other market, savings, money market accounts, bonds, stock market, and crypto, and move it into a real asset that is this big, because this is the Mac Daddy of all assets. If you combine all of them, there's a $900 trillion market, and real estate is the lion's share of all of it because of the $300 trillion. It's actually 390, right? And if you look, there was some other thing in there that was outside of commercial and office and stuff that went into infrastructure and basically the highways and the byways and industrial land and agricultural land that moved it all the way up to like 763 trillion. But the point is, it's huge. If you are looking to multiply capital and grow your investments for you and your family, you want to, one, you need to pick where your money is going to be. Number two, you need to make a hard decision to say, you know what? I'm going into real estate and I'm going long, and I'm going to take my hard-earned money and I'm going to invest it, right? Most of the people we talk to are business owners, right? So they own a business, they make a lot of money, and they're like, dude, I don't have time to go and find my own deals, pull my pocket folder up, find my own deals, look for the own deals, manage the tenants, the toilets, the termites, put together a team, make sure the accounting is right, raise the capital, do the legal, do the contracts, oversee a team over that time, and run my business. It's just too much work, dude. Trust me, it's a lot of freaking work. It's not easy. But the benefit of knowing where you want your family's money to be that continues to pay you over time, you get cash flow, capital preservation, appreciation for the future, as well as you get scale while you folk keep your main thing the main thing and invest money in real estate and let somebody else do the headaches and just send you a check. That is the game you should be playing for your family. Now, you don't want to do that. I get it. But that is the way that people have multiplied millions and millions of dollars for generation, thousands and thousands of years. This is not new. That's why I like real estate. One, it's real. Two, I can see it. Three, it protects my capital. I get passive income, leverage, scale. It's proven. Hell, most of the biblical stories in the Bible are fought because of real estate. Everything you see right now, you think it's oil, but really it's land because where that oil come from? It came from that region. That's a land play. That's a land play slash real estate play. So you have to see what's going on in the market. But for this reason, I wanted to share with you guys that there's something happening right now. You should be taking advantage of it. Yeah, I like how my jacket mends in with that guy's jacket. But you should be taking advantage of it right now. These are the opportunities right there. Debt's maturing. There's a lot happening in the market. It's going to start to move the real estate market in the way that's going to benefit you and your family. But you got to make a decision that you're going to start investing your money there as an investor. I'm not talking about being an active investor. I'm talking about taking your money out of a retirement account, savings account, bank account, money market account, high interest, high earning, whatever CD that you have at the bank and move it into a real asset so it can go up with inflation. Because if not, your cash is just going down in value over and over again. Since I've been born, the dollar has lost 86% of its buying power. 86%. That means if you had $100 in the bank account when I was daggone born, it'll only buy you $8.60 worth of goods today. That's ridiculous for the amount of money that gets printed. And you can't do that. You can't stay in front of that unless it's in a real asset that goes up with inflation, not down. All right. Real estate does that. The type of real estate we look at, commercial, multifamily, income producing real estate. All right. So that's the pitch. I know that's a lot. The reality of it is I want you to invest with us. So if you're interested in investing with Bell Capital, you have a good attitude, you're serious about it. You can invest 200,000 or more. Go to bell-capital.com. You can do two things there. Schedule a call or you can hit get started and you can register your account, take a look at the open fund, and then we would love to talk to you and answer your questions and get you started with your investment. Um, that's kind of what I wanted to say to you guys today. For me, I'm excited about this because I see what's happening. Like I'm watching it, I hear about it all the time. My son got into trading, so I get to hear from a perspective of like what's going on with the trading world. Money is constantly moving and listening to him and what he's focusing on. And then I go back to my real estate side and I'm like, dude, I like real estate better, but I get to understand the way capital is moving. So you need to also make sure that your money is moving out of the market into a real asset so that way you can take advantage of what I just said is going to be the biggest opportunity in my career. I'm going to take advantage of it. I don't want to do that with you guys. So go to bell-capital.com. Love to talk to you. Or you can keep doing what you're doing now. Keep showing up. I'll keep doing these things for you. And I'm here for you. So let me know if I can help with anything. Let's get after today, gentlemen and gentle ladies. Boom.